Donald Trump returning to the White House on Monday as the 47th president of the United States, with the global markets showing mixed signals as investors try to figure out what the future holds. Russell Matthews, a senior portfolio manager in charge of global macro at RBC Blue Bay Asset Management, told Reuters news agency that he expects President Trump's approach to be chaotic, unpredictable, and spur of the moment, and driven by Donald Trump himself. Right now, the US dollar is trading near its strongest levels against Canadian's currency in almost 5 years, but down against others. But what should African debt issuers, monetary policy leaders, investors, and others prepare for under the new Trump's administration? Chatting to me on this now is Johnson Chukwu, a licensed market professional and the group CEO at Dakari Asset Management. We thank you, sir, for making the show tonight. Welcome to the RS Exchange.
Thank you, Bosin, for having me. Good evening.
Give me your first word. Thank you. Give me your first word as a market professional on the return of Donald Trump to the White House.
Well, as a market professional, what I expect is that Donald Trump is going to recreate a world order, both social and economic order. And he's already doing that from the first day he was sworn in. So I expect a lot of turbulence. I expect a lot of uncertainties, I expect that the government of Donald Trump will take both physical and monetary measures that will disrupt the current global economic order. And like I said, his comments prior to his being sworn in, his comments, his speech at the swearing in, all point to a very disorderly economic environment.
So you sort of agree with Russell Matthews, I quoted him earlier out of Reuters, saying he expects Trump's approach to be chaotic, unpredictable, spur of the moment, as far as and driven by Donald Trump himself. Do you agree with that in terms of what to expect in terms of fiscal and monetary policy preferences? Johnson.
Yes, Bosin. I mean, it's no-brainer because we all know how impulsive Donald Trump is and how his first time as a president was, how his campaign for his first time as president was, how on which basis he campaigned for the his second coming as a president of the U.S. Of course, we know that Donald Trump had made it a clear point that his economic policy is going to be neo-mercantilist, which means he's going to focus on creating barriers, discouraging imports to America, encouraging exports from America, creating a financial system that the American economy should be semi-autonomous. We've seen that in his announcement as it relates to his energy policy. We've seen that in his announcement posting military men to the southern borders with Mexico. We've seen that in his comments as it relates to introducing new tariffs against Mexico, Canada, and China. And we've seen that in his statement that he was going to defund NATO. And yesterday, while he was making his announcements, he made it clear he automatically disrupted one of the key major selling points of America, being a major funder of WHO, World Health Organization. And he withdrew America from the Paris Climate Committee. So these are indications of we're going to have a very volatile economic environment because of the size of the American economy, because of the importance of the American economy in terms of being a consumer market to major export economies like China, in terms of being a major technological base, in terms of the dollar being the financial the instrument for global trade. So these are factors that will make America's unstable, you call it unstable, or volatile economic policies to be very disruptive to the world.
So do you have concerns? What are your concerns for the global financial markets under Donald Trump's return as the U.S. president?
Well, if you look at, if I have to only focus on what he has said so far, Donald Trump said he's going to reduce taxes in America, both corporate taxes and household taxes. Among his executive orders yesterday was for the ministries, agents, and department of the government to provide funding to the most vulnerable. So that funding, you have to ask where it's going to come from. If you at the same time you are proposing to reduce taxes and you also want to provide financial support to vulnerable families in the US. So you're going to go to the Federal Reserve Bank and ask for funding. You're going to borrow from the Federal Reserve Bank. And being that the dollar is a global currency, should Federal Reserve Bank print more dollar, that would disrupt the global macroeconomic environment. You're going to see a lot of dollar flow into the economy, into the global economic space, and that will affect exchange rate globally. And then once exchange rate move, it will affect the flow of capital as well as flow of goods and services.
Very interesting. So as we begin to bring this home to frontier Africa, what should African bond issuers, both sovereigns, governments, and corporates should prepare for under Trump's new government? How do you think this will be? We saw Benin Republic going to the flagging of the 2025 Eurobond round just about a few days into the new year. So what do you expect that governments and banks and other financial institutions going to the global market should expect as far as debt offering is concerned?
Well, Boston, it depends on how the Trump government funded the deficit, the likely increase in deficit you're going to see in the U.S. fiscal framework. If it does go, if it wants to fund that by borrowing, issuing treasury bills and bonds, then it's going to price up the cost of bonds, and that will mean that capital will flow back to U.S. and other Western economies. So you're going to see an increase, material increase in interest rates globally. If he has to borrow from the by issuance of bonds and treasury bills or treasury notes to the world to borrow to fund that deficit. If you decide to fund that deficit from injection from printing of funds, money by the Federal Reserve Bank, then you're going to see a reduction in interest rates, which will also see arbitrage opportunities by U.S. Or Western countries traders who will be looking for instruments that have better use. So African bond issuers will benefit from it. You're going to see a lower interest rate environment, which will also impact positively on African bond issuers. Of course, you have to price in the risk, the sovereign risk of African bond issuers, given what has happened in a few African countries like Ghana that defaulted on their bond. But apart from that higher risk profile of African sovereigns, we would also expect that should the U.S. government decide to print a dollar to fund the deficit, then we should see lower interest rate environment globally.
So when we now go to the key market metrics, as it were, the U.S. dollar in terms of exchange rate, inflation outlook, and interest rates from the U.S. Federal Reserve. On the campaign trail, Donald Trump seemed to took a bit of a jab at the U.S. Fed Chairman Jerome Powell and what he's doing, as well as the Treasury Secretary. Of course, he's going to have a new Treasury Secretary, by the way, but of course, I think he's going to keep Fed. So what would this mean for emerging and frontier market investors? So just for us to summarize this conversation.
Well, the frontier investors should recognize that for those countries or emerging economies who are resource export-oriented economies, we're going to see a slowdown in demand for resources. The U.S. government has said it's going to support investment in fossil fuel, and it wants to be the biggest, it's already the biggest producer of crude. It wants to increase that dominance. He also wants to disincentivize investment in electric vehicles. So that means there will be reduction in demand for some input from frontier economies. We should also expect that the trade barrier that the U.S. government is threatening to impose will also lead that we're going to see a reduction in global trade, higher cost of goods and services across the world, and it will affect negatively most emerging economies, given our weak financial or economic standing.
All right, we're grateful for those market insights on what to prepare for under Donald Trump's second presidency. Do have a pleasant evening out there. Johnson Chukwu, the Group CEO at Carrier Asset Management.